Okay, so in this video, I'm going to show you how I trade using EMAs/MAs on a daily basis. Now, this is a purely non-exhaustive video. I'm not going to be able to go through every single strategy that I use, but this is like pretty much 90% of the time I'm using an EMA or MA. This is how I use it. Okay, so this is incredibly important. The one thing I will say though is that this is a very informal video. I'm gonna just talk and explain as I go. I don't have it scripted at all, so just please bear with me as I walk through this video. Okay, now there are two underlying methods to take a pullback using EMAs. Now, the one thing I do want to emphasize here is when you're using EMAs or MAs, this should be EMAs and MAs, is you're using it to take a pullback, right? Either a pullback into a demand level or a pullback into a supply level for a reject. So you could be using it for a bounce or a reject, but generally speaking though, they are pullbacks, right? So pullbacks into a strong rejection level or pullbacks into a strong demand level for continuation to the upside. Can be used for upside or downside plays, but they are not used to breakouts. They are used for pullbacks. This is incredibly important, okay? Now, two setups I take using it, and I define it in two different ways: an intraday setup and opening bell setups. Okay, so the first setup is what you would take after 10 o'clock, after 11 o'clock, after you've already taken all the plays on your watch list. This is what I look for: a break and retest of a relevant level, plus the 5, 8, 13 EMA and the 5 or 15-minute cloud as confluence, or a larger EMA cloud on the smaller time frame, i.e. the 34 or 50 EMA. Now, I'm going to get into these clouds in a minute. Don't put too much emphasis on these clouds and start looking them up. What do they mean, blah, blah, blah. I'm going to get into that in a second. I'm going to show you exactly the clouds I use, how I set it up on the chart, and then I'm going to show you a bunch of examples. But the point that I'm trying to do here and show you is that you're not using these EMA clouds as sole indicators or sole reasons to enter. In fact, you should never be entering a trade because there's an indicator and that's the only reason why you're entering. You have to have something else there. And then something else there in this example is the break and retest of a relevant level. This is my bread and butter, right? On intraday setups, this is my bread and butter, a break and retest at a relevant level, i.e. AMD breaks above 85 and you're looking to catch a pullback off of 85 and you just so happen to have a nice EMA waiting there at the 85 level, added confluence into that balance zone, and that's where you take for continuation. So that's what I'm talking about. You need something else there, not just an EMA, not just a moving average. You need something else there. Opening bell setups, same exact thing, right? Same exact thing here. Same thing. So retest of demand supply level, i.e. a key level on a larger time frame, mainly the hourly and 4-hour time frame. Plus using the 34 to 50 EMA cloud on the 15-minute, hourly, or 4-hour, or the 180 to 200 EMA, or the 200 MA on any time frame. Now, again, don't get too worried about these moving averages and the numbers behind them. I'm going to show you my exact setup and you'll see what I mean in a few minutes. But one thing I want to give you a little hint on is this 200 MA. And this 200 MA works really well on the 5-minute, the 15-minute, and the hourly time frame. Oftentimes, what I'll do is I'll look for a retest of a nice demand level, right, or a supply level, depending on the setup, and the 200 MA on the 5 or 15-minute, which works incredibly well. Foreshadowing here, I want you to keep this in the back burner, right? This is a very important moving average. Okay, so moving on. What's the criteria for using an EMA or MA? Trend. Trend's the only criteria. This is the most important thing. Don't throw up moving averages on your charts if there's no trend. If the stock is trading and consolidating, ping-ponging around, doing nothing, going in circles, there's no reason to have EMAs or MAs. EMAs and MAs work only when the trend is established. There's an upward trend or there's a downward trend. And if you don't know how to find trends yet, I recommend going back and looking into YouTube and seeing how to identify trends. But trend is very important. You need to have a clear and defined trend. If you do not have a clear and defined trend, then there simply is no trade using EMAs or MAs. Okay, let's jump straight into the chart and not waste any more time. Indicator section, I use HTT clouds. This is what I use. You could also use Ripster EMA as you please, or you could use my_EMA. They're all the same thing. Mine just is a little bit different. Mine has my exact settings. So you click onto it, yours are going to look exactly like mine. Now, one thing I want to show you here is there is trend here. This is what a trend looks like. Now, I would not have these EMAs up. I would simply just hide them if there was no trend, right? If it's consolidating around, ping-ponging around, there's no reason to have EMAs. But in this case, I'll keep them up. And we're going to go right into the settings icon, and I'm going to show you my exact settings. These pretty much are my exact settings. There's only one change I'm going to make, or two changes I'm going to make here. I'm going to change the source to HL3, right? So high, low, close divided by 3. And then I'm going to change my hide VWAP above daily or above. And I'm going to add 200 MA line. So 3 changes really. I'm not going to add the show 100 MA, although oftentimes you will see my chart with that. I just want to keep these charts as clean as possible because with these clouds, it can get very wonky and complicated. And you'll be like, okay, why? This is really confusing. It's not that confusing, but I want to keep it a little bit tighter. So I'm going to hide the 100 MA for now. Okay. The first question you might be asking is, where the hell am I getting these numbers from? The 8, the 9, the 5, the 13, the 34, 50. What the hell? And it's a good question. And I just want to say, I'm not creative. I didn't find this out myself. This was coined by other traders, other very solid traders, but they also didn't get it themselves either. They got it from the Fibonacci sequence. The Fibonacci sequence are just numbers that tend to work out really well. So the 5, the 13, the 34, the 50 or 55, the 89, right? These are basically a Fibonacci sequence. The only numbers here that do not match the Fibonacci sequence are going to be the 180 to 200 EMA. Now, the reason why I added these personally is because, well, other traders use it and it works out really well. And I'm going to show you why it works out really well in the next couple minutes. So we're going to exit out of this now, and I'm going to walk you through what these clouds actually mean. Okay, so clouds are just EMA zones, right? EMA or MA zones. So rather than a singular line like this, where this would be the 8 EMA, it's going to show you a moving average zone between multiple moving averages. So in this case, we have the 8 EMA in the middle, right? This is the middle line. And then we have the 5 EMA on the inner bound and the 13 EMA on the outer bound. So it's creating a zone rather than one line, if that makes sense. Now, the same thing is happening here. We have the 34 EMA on the inner bound and the 50 EMA on the outer bound, okay? So why do we do this? Why am I doing this as opposed to using regular lines? You could use regular lines and you'll be perfectly fine. But the one thing you'll notice is that when you're trying to catch a pullback, right? Institutions, hedge funds, retail traders, they might be using a different moving average than you're using. So when they're trying to catch a pullback and they have their algo plugged into the 32 EMA, you're gonna miss that entire trade if you're using the 34 EMA. So rather than using one line, we're using a zone. A zone gives you an added area where you can start scaling in at. And it will help you a lot with your trading, especially if you trade using the supply and demand strategy, because you can tie in moving averages with supply and demand. And this is pretty much how I trade on a daily basis. It's not very complicated. It's literally just tying in moving averages with supply and demand or breaking retests. So I'm going to show you a bunch of examples here because I think explaining it is one thing, but actually showing you examples is going to bring you to a whole different level. One other thing I want to add here, this zone here is the 180 EMA on the inner bound and the 200 EMA on the outer bound. This orange line is just the 200 MA. The 200 MA works really well on any time frame. I keep it up as a singular line rather than a zone. You could also add a zone there, but I prefer just to keep it up as one line. Okay, so let's jump over to the chart now and let's look at this particular trade on AMD. So this is the first example I have. This is the break and retest of 81, right? The break and retest of 81, this was on September 8th. And as you can see here on the hourly time frame, you're wondering why the hell did I get the 81.5 level? 81.5 comes from this level. We have multiple, ignore this over here, but we have multiple retests off this 81.5. Was demand, then turned supply, then turned demand, and now we've broken above it, held above it, and sort of turned it into demand again. So this 81.5 is a relevant demand zone. On the 5-minute time frame, I saw that we slammed through it on September 8th. And because of this reason, I was looking to catch a pullback. So when looking to catch a pullback on a very parabolic move, this is a very parabolic move. What do I mean with that? Basically, the stock was moving very aggressively to the upside, right? Because it was moving very aggressively to the upside, I wanted to catch a pullback into the 8 EMA cloud. The 8 EMA cloud being the 5 EMA on the outer bound, on the inner bound, and the 13 EMA on the outer bound. So what I did here was wait for the stock to reject off of it once, slam below it, didn't take the trade just yet. We made a new high, broke above the 81.5 level, And I waited for this retest. So as soon as it got to this level here, broke above it, I don't want to just long it here and see how it pans out. What I want to do is I want to wait for it to recede back to this 81.5 level. 81.5 level is going to be this demand zone off 81.5 and also the 8 EMA cloud. So I would know I could very easily scale into this position and use the 5 EMA as my entry point, the 8 EMA as my full size, and the 13 EMA as my stop loss. So I'd stop below the 13 EMA. Okay. Now, after I've entered it, right after I entered this trade, just a little sort of walkthrough, I would scale out 50% of the contracts here. So I enter here, I'm scaling out over here, a retest of these highs, and then I would use the 5 EMA as a stop loss for the remainder of my contracts. So then I took profit here once we broke the 5 EMA, because this is signifying that we might see a little bit of a sell-off once we're breaking the shorter term moving average. Okay, so that's how I took that first trade. And you could also see that I did the same thing almost again here off of the 81.5 level and the larger moving average. Now, what is this moving average? We can go to the settings icon and we can see that this larger moving average is the 72 to 89 moving average. Now, it's not something I use often, not as often as the 3450 and the 8 EMA and the 200 MA, but it's one that worked out pretty well here as well. We're gonna hide this now and we're gonna jump over to the next chart. This is the second example, also using AMD. And as you can see here, this rejection point was pretty nice, right? This 81.5 level again, right? Turned out to be another sort of rejection zone on AMD. Let's remove this because it's creating a little wonky chart. And you can see, we're interacting with the price action with the 81.5 level nicely. We bounced off of it in the morning. No trade just yet. I did not take the trade just yet. I waited for us to flush. We flushed on high volume. You can see volumes increasing to the downside. We're respecting this 8 EMA cloud all the way in the move down, but I'm not using this 8 EMA as the sole reason to enter, right? You could have said, Brett, why didn't you enter right here? But you see it's respecting the 8 EMA. The reason why is because there's no other reason to enter the trade besides the 8 EMA, so I'm going to wait. I wait for us to break this clean level, this 81.5 level, and then a retest into this 8 EMA again. Now, once it retests this 8 EMA, the same concept, I'm using the 5 EMA as an entry point, the 8 EMA as a full scale, and the 13 EMA as a stop loss. It breaks above the 13 EMA, I'm probably going to stop out. And that's just another reason for me to enter the trade or hold the trade for a little bit longer. I'm going to stop out at the 13 EMA, okay? So this was just another example of a break and retest, just using a downside move. So we slam below a key level, retested the key level. We have this 8 EMA cloud here as confluence, enter the trade. It's as simple as that. This is just another intraday setup that worked out very nicely on AMD. Third chart here. This is not a trade I took, but just something I was looking at on a larger time frame. You could see how the stock interacts with the 85 level. It's creating a little base at 85, bounced once, right? No trade just yet, bounced a second time, no trade really just yet because it's still defining the zone. And this third retest, this third bounce, you can see that we have the hourly, what moving average is this, right? We can see this is the hourly 180 to 200 EMA, right? And because of that, we have the 85 plus this 180 to 200 EMA lining up almost perfectly at 85. This is a possible entry zone on a larger time frame. And you can even just see how we interact with this level, right? With this larger moving average, we tend to hold it pretty nicely. So when you have, especially when you have relevant levels like an 80 level on AMD combined with the 180 EMA with the 200 EMA, right? So it works out pretty nicely on even larger time frames. I'm going to focus mostly on smaller time frames here, but I just wanted to show you how this would have worked on a larger time frame. You just have to, again, have a key level, right? Have an interesting level where the stock tends to be rejecting off of, creating a base off of, and then use a larger moving average as a entry point, as an added entry point for confluence for you to enter that trade. Okay, fourth chart I'm going to show you is going to be the Apple trade. So Apple, without even going to a larger time frame here, I'm just going to stick in the 5-minute time frame. We can see how the stock is interacting with this 157.65 level. We created a low here on August 30th. Then we also created a close here on August 31st, or Not really a close, just bounced off of it, but we bounced off of this August 30th level, bounced off of it again into close on the 31st, and it's creating a nice level even pre-market or even after hours on the 31st. Pre-market didn't really do much, but on after hours on the 31st, it was creating a nice level. I guarantee you if we were to go to the 15-minute, hourly, or 4-hour, we would find that this is also a nice level, but I'm just going to stick with the small time frame here just to show you how this moving average worked here. So we see that we want to create an entry point at this 157.6 level. Then we find out on the 5-minute time frame that we also have this 200 MA. And because we have this 200 MA, we have another added confluence. We have a nice little 5-minute intraday level. Plus we have the 200 MA lining up perfectly with this 157.65. So that's an entry point, right? That's a potential entry point where you would stop out. You would stop out above the next key level on the smaller time frame. So 158 would be your stop out. So that's how I would take this trade. I'm just showing you how these larger moving averages, especially the 200 MA, works very nicely on these charts. Again, have a reason to enter and then use a moving average as confluence. Okay. Now, JWN, I think, was also a great trade. This was probably even better. You can see here, this is Nordstrom, right? Go to the hourly time frame. You'll see that this is a very level at 18.33. This is a much better example. You can see lots of wicks and rejections off this level, holding it very nicely. We even held it here, right? Literally perfectly off this 50 EMA, right? Or 34 EMA here, off this 18.3. Going into the 5-minute time frame, this was the trade that I actually had taken. I saw that we rejected off of it very aggressively here on September 2nd. We also held below it on the 6th. We came back down. I'm basically looking for a retest of this previous high that was broken out. So this is a resistance level turn support. So I'm waiting for a retest. This retest level lined up perfectly with the 5-minute 200 MA. So this is a perfect entry level for calls, right? Or again, this is me showing you how to use these larger moving averages on moves that might not be an established trend just yet on an intraday period. This is still an established trend, right? On the hourly time frame, this is still an established upside trend, but on the 5-minute time frame, it's not really. This is an opening bell play, right? This is a purely opening bell play. Okay, Costco. What I'm showing you here in Costco is a little bit different. Costco was a trade I had taken on Friday, and you can see here what happened. I was watching this 535 level. We broke above 535, sort of consolidated, waited around, pulled back on very low volume, so I was okay with it. And then we broke out of this little flag and made a move up. Now we rejected off of this hourly 538 level. Now this hourly 538 level is relevant for 2 reasons. 1, because it's a nice level, but then 2, because if you were to go to the hourly time frame, you're also going to see that we have this hourly 200 MA. So it makes perfect sense why we rejected off of it. So just keeping in mind that you could use EMAs and MAs as entry levels, you could also use it as potential areas to take profit. So you have an idea of why it rejected off of this level. It's simply because we had this larger time frame moving average and larger moving average at this 538. So that would be a perfect area to start scaling out, is into these key levels. So hopefully this helped you guys. I know this is a lot of information, and there probably are some more videos I should be making on this because there's no way I'm able to cover everything in one sort of video. But the general idea is, when taking intraday setups, have a level you're watching anyways, and then add a moving average into that zone as a potential bounce level or a rejection level. That's how I take it. That's how I trade it. It's not complicated. It's not rocket science. These are just break and retests into these moving averages, and then using them as potential stop out levels. So using these EMA clouds as exit points as well. So you can have your sort of guideline where you're going to exit, but you could also use these EMA clouds as another form to keep you into the trade. So hopefully this helps. And if you have any questions, please let me know. Thanks again.